Hey guys, I'm Scarlett from Miss Money, and the Redditors are back. The Wall Street Bets saga continues in this monumental time. You thought 2020 was crazy? 2021 has been absolutely nuts, but in a good and very exciting way. We're diving in right away with the latest on the Gamestop short squeeze and how you can make some big gains. Gamestop is beginning to go to the moon once again. I have a short-term price prediction I'll share toward the end, and you won't want to miss it. You guys will love what I have to share. And if you can, subscribe and like real quick before we move forward, and join the family here. Retail investors are flooding into GameStop for round 2, sending shares up almost 200% in just over a week. So is the rally part of another Reddit-driven pump and dump scheme, or will this time be different? Let's dig deeper to find out. Of course, in late January, we all know about Wall Street Bets and how investors coordinated on social media to drive up the share price. And yes, the strategy did work initially, sending stocks like GameStop, AMC, and BlackBerry sky high before they quickly fell back down to earth. GameStop, though, has recently outperformed the market, and it'll be exciting to see what happens next. I'm sitting on the edge of my seat as we speak. And some recent news did just drop. According to a February 23rd press release, GameStop is searching for a new CFO with the capabilities and qualifications to accelerate its transformation to e-commerce. So, is e-commerce going to save GameStop? Well, I guess we'll see, but on January 11th, the company released a holiday sales update covering the 9 weeks ended January 2nd. And during this period, online sales soared 30% to make up 1/3 of the $1.8 billion in total sales. The cost-cutting and fast-growing e-commerce business suggests GameStop is making progress in its turnaround. But while investors can be cautiously optimistic about this stock, the valuation is also a real concern. GameStop is expected to turn a profit of $1.12 per share in fiscal 2023. GameStop stock isn't worthless. The company's online business may eventually grow large enough to replace its struggling brick-and-mortar stores and deliver profits to investors. But here's the thing, it is far from reaching that point, guys.
There's little doubt it's been a rough 2021 for Melvin Capital, but the firm at the center of that GameStop saga is starting to turn things around in February. We've learned from 4 sources familiar with the matter that Melvin posted returns of 21.7% in the month of February. Those double-digit gains came after losses of 53% in January on some wrong-way short bets. The performance and some inflows brought assets under management from $8 billion at the end of January to nearly $11 billion by March 1st. A source close to Melvin tells me that there hasn't really been any massive changes to strategy. They're focused on ensuring that their short positions have ample liquidity so they don't get stuck again in the event of a squeeze. Additionally, I'm told they'll have more but smaller short positions, which limits their exposure to certain names. Their long side remains unchanged, I'm told. The firm declined to comment on performance. Melvin had said previously, though, that it closed out its GameStop short position in January. That holding, of course, is what initially caught the ire of the Reddit crowd. Put positions disclosed toward the end of 2020, making Melvin and its founder, Gabe Plotkin, a common enemy for the GameStop bulls. Now, afterward, Plotkin found himself ensnarled in the web of GameStop, even appearing before Congress a few weeks ago as lawmakers sought to unpack what led to the volatility in certain stocks. As Melvin struggled in January, 2 other hedge funds, Point72 and Citadel, invested $2.75 billion to help Melvin stabilize.
Melvin Capital fell as much as 53% in January in that short squeeze. The fund returned 27.1% in February, recouping some of the earlier losses. Hey guys, let's take a look at where GameStop is right now. Just look at this chart. These are insane numbers right now, and you might be asking if right now is the best time to buy. As you'll notice this week, we got back over $100 per share. Little dips here and there, and the peak happened the other day at just under $140 per share. This week's spike came minutes after activist investor and GameStop board member Ryan Cohen tweeted an apparent screenshot from a Pets.com ad. Some Twitter users speculated that the image was some sort of cryptic message about GameStop's outlook. And the last time Cohen posted on Twitter, and it was a picture of an ice cream cone, by the way, shares soared amid a flurry of day trader activity. And that tweet helped propel the Grapevine Texas-based company to its second best week ever, and a 142% rally over just 2 days. Amid the rally, the stock's traders and their online movement came under fire from none other than Susie Orman on Yahoo Finance. She basically called the whole thing stupid and crazy, saying the effort to short squeeze the company's turned investing into a game that needs to end. Verbatim, she said that wasn't an investment, that was a game, and that game needs to stop. She also went on to say, you don't invest in somebody or in something because you figured out a way to squeeze them. She adds, you invest in a company because you like the company, you like their management, you like their potential, they're ethical, they're honest, and they have growth. They can help this world. Investing legends and Motley Fool co-founders David and Tom Gardner just revealed what they believe are the 10 best stocks for investors to buy right now. And guess what? GameStop wasn't one of them. So, what's my price prediction? If last round is any indicator, and if we see some of those same repeating patterns, I do think maybe we could see GameStop go back up toward that $400 or close to the $500 per share. But here's the thing, what am I going to do? If I'm being totally honest, I do plan to buy in some of these slight dips at around $100, but I'm not going all in, guys. And if you're doing it for the movement, that is great, but the stock is so volatile. Could you get super rich from it? Absolutely, you could get crazy rich from this. Big profits, maybe even literally go to the moon again. But could you also lose all of your money? Absolutely. But I do think if you're going to get in, now's the time before that quick rise happens, because once it dries up, it's going, it's gone, it's going to the moon. So you'll want to join in that ride now. So thanks for watching, guys. I'm Scarlett from Miss Money, and let's invest and get successful together.